Hello and welcome to Markets View at Deven Choksey, the daily market podcast where we decode the Indian financial markets. This morning, the GIFT Nifty is higher, indicating a gap-up start for the Indian markets. The Asian markets are mixed in early trade, where Hang Seng is up more than 1%. US futures were slightly higher after cash market ended largely in the green. The US market ended flat, where S&P was up around 0.14% ahead of key March inflation data. US 10-year yields were steady at 4.35%, where Dow estimates US CPI to have risen by 0.3% on a month-on-month basis. The crude did fall for the second day amid geopolitical tensions to settle below $90 a barrel, and gold hovers near record high levels ahead of minutes of Fed meet. So all in all, this is how the trade setup for the global markets look like this morning. Let us now take a look at the trade setup for today. And if we see the market expectedly reach the upward sloping resistance trend line and hit the target of the 22,750 to 22,800 zone, but could not sustain record high levels due to profit booking. If the index manages to climb above the set zone of 23,000, can't be ruled out in coming sessions, but till then, the set zone is expected to be a hurdle on the higher side, and the index may consolidate with support at the 22,500 levels. In the last trading session, the Sensex was down around 59 points to close at 74,684, while the Nifty 50 declined around 24 points to close around 22,643 and formed a bearish candlestick pattern at the all-time highs on the daily charts with below average volumes. Technically, this pattern indicates tiredness for the market at the new highs. Nifty is currently placed near the crucial overhead resistance of ascending resistance line, and also as we see there's a lot of volatility, and the levels of 22,750 to 22,800 are to be watched out. Nifty, which is placed at new highs and showing consolidation, there's still no confirmation of any significant top reversal pattern forming at the highs. So clearly there are chances and volatility is being seen in the market. Of course, there is action in the market at present, but one needs to be very watchful and cautious about the volatility which we have seen in the past trading sessions. At the same time, the upper area of 22,750 to 22,800 is expected to be crucial overhead resistance for the short term, adding immediate support which is at 22,500 level, and a decisive break below this support could trigger short-term downward correction in the market. However, as we clearly see, these are the important levels, but considering all of these, the support and resistance for Nifty and Bank Nifty is something which we need to consider for today. Nifty may face resistance at 22,657 level, followed by 22,771 and 22,831. On the lower side, the index may take immediate support at 22,615 level, followed by 22,578 and 22,518 levels. Talking about Bank Nifty, in the last trading session, Bank Nifty extended its northward journey for the fifth consecutive session, rising 149 points to end at a new closing high of 48,731, though there was profit taking at the top. The index has formed small-bodied bearish candlestick pattern with upper and lower shadows which resemble the high wave kind of candlestick pattern on the daily charts. The index continued higher highs and higher lows formation 4 days in a row, indicating the trend remains positive, but the indecision pattern for yet another session at the top may be suggesting the possible reversal in trend due to profit taking. Bank Nifty is inching higher, but continuous doji formation in the daily chart would be concerning in the short term. Bank Nifty index may see resistance at 48,767, followed by 48,996 and 49,146. On the lower side, it is expected to take support at 48,603, followed by 48,511 and 48,361. So these are all the important support and resistance levels for both Nifty and Bank Nifty. We now take a look at the stock-specific news. 197 Communication, the associate entity Paytm Payments Bank, informed 197 Communication that Surinder Chawla has resigned as Managing Director and CEO of Paytm Payments Bank due to personal reasons. The next stock in focus would be Lupin. The pharma company has launched its first generic version of Oracea in the United States after receiving approval from the US FDA. Exide Industries will also be in focus as the automotive battery manufacturer has entered into an agreement for acquiring a 26% equity stake in CleanMax Arcadia, a special purpose vehicle promoted and incorporated by CleanMax Enviro Energy Solutions for the generation and supply of solar power. Keep an eye on Paisalo Digital as the company said assets under management grew by 32% to 4,622 crore at the end of March FY24 quarter, while disbursements increased 38% to 3,588 crore and the co-lending loan disbursement grew by 100% to 1,128 crore during the same period. And last but not the least, we keep an eye on Shivalik Rasayan as the US FDA inspected the API facility of the company at Dahej in Gujarat during April 1 and April 9 this year. The US FDA closed inspection with 7 observations. The observations are procedural in nature. So these are all the important stocks in news. We now take a look at the FIs and DIs data. The foreign institutional investors net sold shares worth Rs 593 crore, while the domestic institutional investors bought shares worth Rs 2,257 crore on the 9th of April. So that is how the market setup for today's trading session looks like. As we constantly keep telling you that market conditions can be volatile, but in all those volatile conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.